Hey guys, this is Jonathan Washburn, hashtag the Dean of Mortgages. Now, it's been a while since I've done a video, but I wanted to check in with you this morning to discuss something that you may have been hearing about interest rates. Well, interest rates have been incredibly low for almost a year now, but things have gotten a little bit worse as the winter has gotten longer. Over the last 2 weeks, the price for mortgage-backed securities has plummeted by over 350 basis points. Well, what are mortgage-backed securities and what do they have to do with interest rates? Well, MBSs, mortgage-backed securities, are basically security instruments that are full of mortgages that investors can purchase. And these MBSs are full of like hundreds or sometimes thousands of mortgages. And the investors are like, oh, I want that because then I can collect interest payments from 1,000 people paying their mortgage over the next 30 years. It's typically seen as a really safe investment because for the majority of our nation's history, most people have decided to pay their mortgage payments. Now, if you've seen The Big Short, you know that this hasn't always been the case. And when this is not the case, things get pretty bad. However, like I said, typically they're a very safe investment. And when the price of mortgage-backed securities goes up, that means that more people are investing in them at a higher price, so banks can then in turn give customers, mortgage owners, a lower interest rate. Well, when they go down, then mortgage interest rates actually go up. Well, what are basis points? And what does a 350-point drop do to interest rates? Does that mean that interest rates are 3.5% worse than they were 2 weeks ago? Well, no, but the same interest rate that you were quoted 2 weeks ago today would cost 356 basis points more, or 3.56 discount points more. Well, what's a discount point? A discount point is 1% of the loan amount. So a $300,000 loan would cost more than $10,000 more today than it cost 2 weeks ago if you wanted to get the same interest rate. Well, if you don't want to pay that extra $10,000 in fees, then you simply have to take a higher interest rate. Now, different loan types are going to be affected in different ways, but generally, this amounts to about a 3/4 of a point increase in rates in just 2 weeks. So if you were quoted at a 2.75% 2 weeks ago on a refinance and you're like, I think I'm going to wait until rates get a little bit better until they get down to 2.5%, today the exact same loan for you might be at a 3.5%. Well, why is this happening now? And are things going to get better or are they going to get worse? Well, why are they happening? Well, the massive stimulus plans are causing fears of inflation in the market. Remember, inflation is the arch enemy of interest rates. If I am trying to purchase a mortgage-backed security and I know I'm going to collect 3.5% from this mortgage owner over the next 30 years, that's really good. Unless inflation's at like 6%, and then all of a sudden that mortgage interest rate is not attractive anymore. And because, our government is spending so much money right now, we're afraid this is going to cause inflation, and that's kind of what is kind of freaking out the mortgage-backed security market. But you might be thinking, but John, I thought the Fed said that they're going to keep rates at zero. Are you just trying to screw me here? Are you trying to rip us off? No. You're right. The Fed is going to keep the federal funds rate at zero, but this has no effect on mortgage rates. That might affect the amount of interest that you're getting from a checking account at your bank. That might affect how much your interest rate is on your credit card, but it has nothing to do with mortgage rates, no matter what other people tell you. Well, are things going to get better? We think so. The experts think so, but they don't know if it's going to get better right now. They're thinking, maybe 3 to 6 months from now, interest rates might start getting lower again, but they envision it being a trend here for at least the next couple of weeks. This can create problems. One might be the reduction of buying power. Let's say you were pre-approved 2 weeks ago to purchase a home for $300,000. Well, a higher interest rate on your loan means a higher monthly payment on your loan, which in turn could mean that you're no longer eligible to buy a house for $300,000, right? Because now all of a sudden your mortgage payment, your monthly payment on the exact same loan is $150 higher than it was 2 weeks ago. So if you're a pre-approved buyer, if you're out there searching for homes, like I know a lot of you are, because there's not that many homes out there and we have a lot of people needing to buy. If you're one of these people, you've already been pre-approved, make sure you reach out to your lender and just check up on it. right? Hey, I see that rates have gone higher. I know this is nothing that you can, necessarily predict or even control, but I just wanted to make sure that I'm still pre-approved to go up to the amount that I've been looking at. Now, if your lender is good, he should have already reached out to you to let you know this. But again, this could definitely affect your buying power. Additionally, if you were in the middle of a refinance and you didn't pull the trigger 2 weeks ago, you might be kicking yourself right now. Remember, big picture, interest rates are still incredibly low, right? They are still at close to historic lows. Historically, any rate under 5 is really good. And almost all rates right now are still under 4, which is absurd. You may not get that 2.5 that you were looking at 2 weeks ago. If you're looking at a 15-year, I put a guy into a 1.99% interest rate a few months ago on a 15-year. It was insane. I couldn't believe it, right? Now, same guy might be getting like a 2.25, 2.375. You might be disappointed that you're not yet in that rate that was so incredibly low, but the rates are still very, very, very low. The market is strong. Houses are appreciating. House values keep going up. There's lots of good things to consider with the housing market, but rates did get a little bit worse. I'm sorry about that. If you have any questions, please feel free to reach out to me. John.washburn@myccmortgage.com. You could also find me on Twitter, the Dean of Mortgages, on Facebook right here. You could find me on my YouTube channel, youtube.com/c/the Dean of Mortgages. So excited to be with you again. It's been a crazy winter. I hope you're all doing well. I hope winter ends quickly for all of you. This is Jonathan Washburn, Dean of Mortgages. School is out.